When wealthy people warn others not to keep large amounts of cash sitting in a bank account, they're usually pointing to things like inflation, low interest rates, and the hidden risks of the banking system itself. That's exactly why many of them turn to treasury bills, commonly called T-bills, as a safer, smarter alternative to storing cash long-term. T-bills are short-term government securities, typically lasting 4, 13, 26, or 52 weeks. What makes them appealing is simple. They're backed by the full credit and power of the government, meaning the likelihood of losing your money is extremely low. In fact, in the world of finance, T-bills are considered one of the closest things to a risk-free investment because governments almost never default on these short-term obligations. Rich people treat T-bills almost like a high-security vault that also pays them interest. Instead of letting cash sit in a checking or savings account earning a fraction of a percent, they place it in T-bills where the yield is usually higher than typical bank accounts and often beats inflation during strong periods. This means their money isn't just safe, it's growing. Another big reason wealthy individuals prefer T-bills is liquidity. They can be easily bought or sold, and since they mature quickly, the investor gets their full amount back in a very predictable time frame. This is incredibly useful for people or businesses who need access to their money soon but don't want it sitting idle in a low-interest bank. Banks often lend out the money you deposit, which is why they can collapse if too many people withdraw at once. T-bills don't operate like that. When you buy one, the government locks in your return and guarantees to repay you at maturity. There's no middleman risking your funds. For the rich, this creates peace of mind, especially in unstable economic periods or when inflation is rising faster than bank savings can keep up. Another reason the wealthy use T-bills is flexibility. They're an excellent parking spot for money between larger investments. For example, if a wealthy investor sells a business or real estate property and needs time before making the next big investment, they won't dump the cash in a bank. They place it in T-bills so the money earns while waiting. Even hedge funds and major corporations use this strategy. T-bills also offer transparency and simplicity. There are no complex stock charts, no unpredictable earnings reports, and no fear that the market will suddenly wipe out your gains. You know exactly how much you're going to earn, and you know exactly when you'll get it. For many investors, especially risk-averse ones, that predictability is incredibly valuable. Ultimately, rich people don't just want to protect their money, they want to keep it productive. Cash sitting in a bank is losing value every day due to inflation. Cash sitting in T-bills is protected, predictable, and profitable. That's why so many wealthy individuals, institutions, and financially savvy people treat treasury bills as their preferred alternative to traditional bank storage. Real estate, especially cash-flowing rental properties, is one of the most powerful tools wealthy people use to build and protect their money, and it's far more strategic than simply buying a house and hoping the value goes up. Rich investors understand that appreciation is unpredictable, but cash flow is consistent, and that's where the true strength of real estate lies. When you own a rental property that brings in more income each month than it costs to maintain, you've created a system that pays you whether the economy is booming, crashing, or simply standing still. This is why wealthy people often say, own assets that pay you. Real estate does exactly that. One of the key reasons rich people love real estate is the inflation advantage. As the cost of living rises, so do home values and rents. This means while inflation hurts cash stored in a bank, it actually boosts the profitability of rental properties. A $1,500 monthly rent today could become $1,800 or $2,000 a few years from now, while your fixed mortgage payment stays roughly the same. That difference turns into expanding profit, an automatic raise driven by the economy itself. Another big reason rich individuals prefer real estate is leverage. Real estate is one of the only investments where banks willingly lend large amounts of money at relatively low interest rates, allowing investors to control valuable assets with only a fraction of their own cash. A rich person may put down 20% on a $400,000 rental property, yet they get to own and profit from the entire asset. Few other investments allow this kind of multiplied growth. Even better, the tenants effectively pay the mortgage over time, meaning the investor gains ownership of a property without carrying the full financial burden. Real estate also provides one of the most powerful legal advantages available to investors: tax benefits. The wealthy understand the tax code deeply, and real estate is filled with incentives.